And we are joined by Leanne Jones from Bell Direct. And Leanne, it was interesting because we had some pretty promising numbers out of China on the economy, and yet it doesn't feel like it's helped the Australian share market that much today.
Brooke, no, that's exactly right. When we did see that data coming through, we actually didn't see too much movement in the market, although it has continued to hold up that materials sector, which of course is the best performing sector today and the only sector that is in positive territory. So I think those numbers that came through, particularly that import data, which was well ahead of expectations, I think that has provided a boost to confidence for investors in that material space, and also in terms of those iron ore miners, particularly given a lot of the concerns that have been coming out recently about a potential slowdown over in China. So I think it's just provided that boost for that materials sector, which is continuing to perform very strongly coming into this afternoon's trade, despite seeing the overall market really continuing on from those negative leads this morning. We are down about 0.75% and seeing all other sectors coming under pressure. It was very quiet in terms of local economic data, but of course it was all eyes on that Chinese data, but certainly seeing that material space holding up our market, given the weakness that we did see last week on markets.
Yeah, this iron ore price today, I mean, the hope is, I suppose, for a country like Australia that we've seen the bottom for that iron ore price. What can we make of this 4% jump that we've seen in futures today?
It's an interesting one looking at those futures, and I certainly think that is what's pushing up particularly the likes of Fortescue, which is having a stellar performance on the market today, and of course Rio as well. Certainly seeing some confidence, I think, coming back in terms of that iron ore price. As you say, they really have been below $80 a tonne, and of course on Friday we did see it trading up about 1.7%, now above $80 a tonne. So I think that is providing some confidence. I think long term we potentially could start to see a pickup from these levels. We are of the expectation that coming into the December half year, we will actually start to see that iron ore price picking up. We have a forecast on that price of about $90 a tonne. So certainly expecting it to pick up in terms of a lot of those Chinese steel mills restocking, also potential stimulus measures that may come out of the Chinese government, and also with these iron ore prices sitting so low, it does push out a lot of those higher cost producers. So all of that having an impact on the demand coming out of China, and potentially that iron ore price coming into the second half or the December half of the year.
And just quickly to finish off, 30 seconds or so, Leanne, but what are we watching in the week ahead? What are you watching in particular?
Brooke, look, there certainly will be quite a bit out this week. Over in Australia, of course, we have the AGM season beginning tomorrow. We have Cochlear and Telstra out, which of course will be closely watched. And then on Wednesday, we have CSL. But also over in the US, of course, we know earnings reporting season is starting, so a lot of the focus will be on those major banks. But on top of that, we also do have consumer confidence and business confidence out tomorrow. There is quite a bit to look out for on Wednesday. Out of China, we have inflation data. Then on Thursday, we have Fortescue, Iluka and TEN all coming out with their results. And then finally on Friday, I think the big focus will be on that speech by Fed Chair Janet Yellen. So certainly a lot to look out for across all markets, and they all could potentially be market drivers this week.
Great. Thank you very much, Leanne.
Thanks, Brooke.